Introduction of inventory and warehousing cycle. What is inventory? Inventory is one of the largest items on balance sheet. This auditing cycle is the most complex and unique because of its close relationship with other cycles such as purchase and sales. What are the factors affecting the complexity? Inventory is generally a major item on SOFP and the largest item making up the account in working capital. Different in location causes physical control and counting difficult. Diversity of the inventory creates difficulties to auditing, such as factors as obsolescence. Inventory valuation method may differ. There are several methods to calculate the inventory owned by the company. Number 1, first in, first out. Second, last in, first out. Third, weightage average. Fourth, specific on identification. Now, we look further on accounts and transaction related. There are 3 main concepts for inventory and warehousing cycle. The first one is the payroll cycle. Payroll cycle is the list of tasks performed while processing payrolls when we pay to the employee for a set period or on a given date. Second, payment cycles mean the monthly period from the date you pay in any month until the date you due to pay the following month. Third, collection cycle is the set of processes that begin when a customer purchases goods or services and ends with your business receive payment in full. Relevant accounts and transaction related involved in inventory and warehousing cycle. Under payroll cycle, payroll expenses account, payroll accrual account, payroll withholding account. And the next, payment cycle. Under payment cycle have bank account, purchase account, creditor account, and expenses account. And third, receivable cycle. Under receivable cycle have account receivable, bank account, and inventory account.
So next, we will move into the business function and the related document. So this chart will show you the flow of the inventory itself. So first we have raw materials, direct labor, and manufacturing overhead. So these 3 components will be combined and go through into the process to produce the finished goods. So next we will look into the related document in the inventory and warehousing cycle. So first, in the inventory we need to purchase the inventory itself. So in the process to purchase the inventory, there is 2 documents that is required, which is the purchase requisition documents and purchase order document. So when the inventory have been received by the company, there will be also 2 documents, which is receiving report and the vendor invoice. So next, when we receive the raw materials, which is inventory, so we need to store them. In order to store them, the document that will be created, which is raw material perpetual inventory master file. So in there, the data about the raw material will be stored. Next, in the stage to process the goods to become the finished goods, the related documents are raw material requisitions and cost accounting records. So when we finish to produce the finished goods, we need to store them. In order to store them, there will be two documents that will be related to the process, which is financial goods perpetual inventory master file and cost accounting record. And next, for the last part, which is the goods will be shipped to the customer. In order to ship the goods to the customer, there will be shipping document, financial goods perpetual inventory master file, and the cost accounting records. So these 3 documents will be related to the process to ship the finished goods to the customer. Next, we will move to the misstatement that could occur in the inventory process. Misstatement are more likely to occur in the inventory process. The client may use a variety of methods to overstate the inventory, such as inaccurate inventory counts, inaccurate inventory pricing, and also incorrect methods of valuations. So these issues will lead to the misstatement, and the auditor must take the corrective action to show the true performance of the company.
I will continue the presentation with flowchart of the cycle. As you can see here, there are 5 steps must be followed. First is receive raw material. When raw material received, move to receive raw material process. There are update inventory record to reflect received raw material and conduct quality check on received raw material. If passed and approved, proceed to the next step. If failed, returns again raw material to the supplier. Okay, next, put the material in storage. Store the approved raw materials in designated warehouse location. Okay, next step is put raw material in production. Based on demand and production schedule, plan the production. Initiate the production process using the store raw material, and then conduct quality check during and after production. If pass, proceed to the next stage. If fail, rework the production process. Next is put complete goods in storage. Once production is complete, move the finished good to the complete goods stage, which is store the complete goods in designated warehouse location. Okay, last step in the cycle is ship finished good. When order received, move to the order processing process. Pick complete goods from storage and pack for shipment. Shift the packed goods to the customer and get customer confirmation for delivery of finished goods.
I will explain about 3 sections for the inventory business process, which is existence, accuracy, and completeness. First is existence. Existence is to ensure inventory exists in the balance sheet and transaction occur as at reporting date. Second is accuracy. All the transactions are accurately recorded with the data provided at the exact amount and value. And third is completeness. All the transactions occur during accounting period must be in the company's balance sheets. Next are the objective for this section. First is for existence, which is to observe whether movement of inventory take place during the count. And second is completeness. Record the third number for those used and unused for subsequent testing. Third is accuracy, which is compare physical counts with perpetual inventory master file.
In auditing, test of control TOC and substantive tests are 2 types of audit procedures used to evaluate the effectiveness of internal controls and the accuracy of account balances, transactions, and disclosures. The primary objective of test of control is to assess the effectiveness of an entity's internal control over financial reporting. Internal controls are policies and procedures implemented by an organization to ensure the accuracy and reliability of financial information and to safeguard assets. Meanwhile, the primary purpose of substantive tests is to detect material misstatements in the financial statements. These tests are performed directly on the financial statement account balances and transactions to ensure their accuracy and completeness. Examples of test of controls. The first one is segregation of duties test. The objective of this test is to ensure that critical duties are appropriately segregated to prevent the risk of errors or fraud. The procedure is to examine organizational charts, job descriptions, and access logs to verify that incompatible duties, for example, authorization, custody, and recording, are segregated among different individuals. Next one is review of authorization procedures. The objective is to assess the effectiveness of authorization controls over key transactions, and the procedure is by select a sample of transactions and verify that proper authorization was obtained before the transaction occurred. This could involve reviewing approval forms, electronic approvals, or other documentation. The last one is physical verification of assets. The objective is to confirm the existence and condition of physical assets. The procedure is physically inspect the sample of assets listed in the accounting records and compare them to the physical inventory. This is particularly relevant for assets such as inventory, equipment, or other tangible items. Examples of substantive tests. The first one is accounts receivable confirmation. The objective of this test is to verify the existence and accuracy of accounts receivable balances. The procedure: select a sample of customer accounts and send confirmation requests directly to customers, asking them to verify the accuracy of the amounts owed. This helps confirm the existence of validity of outstanding receivables. Next one is analytical review of financial statements. The objective is to identify unusual trends, relationships, or fluctuations in financial statements balances. The procedure: compare current financial statement figures with prior periods, industry averages, or budgeted amounts. Investigate and analyze significant variations to identify potential misstatements or irregularities. Last one is vouching of expenses. The objective is to verify the accuracy and validity of recorded expenses. Procedure: select a sample of recorded expenses and trace them back to supporting documents such as invoices, receipts, and approvals. This helps ensure the expenses were actually incurred and are accurately recorded.
Okay, I will continue with the inventory evidence that can be gathered by the auditor. There are three methods that can auditor use to gather the evidence. Firstly is physical observation of inventory. Second is physical inventory counting, and the third is pricing and compilation of inventory. Okay, we look first the physical observation of inventory. There are three stages: before, during, and after. Okay, we focus on before physical observation of inventory. The auditor should obtain and review the inventory count and plan in advance of the inventory count date. Okay, we proceed to the during physical observation of inventory. The auditor must observe the inventory counting to identify the inventory damage, obsolete, and slow movement item, and then test control over the inventory movement during the count, make test count and check the quantity, and control the pre-number inventory tag. And next, we look the after physical observation of the inventory. The data are transcribed onto inventory summary sheet. To test count recorded should be compared with the final inventory sheet. Also to examine the confirmation obtained, also prepare the memorandum. Now we proceed to the second ways that auditor can gather the inventory evidence by physical inventory counting. Auditor should obtain and review the inventory count plan in advance of the inventory carry forward. As we know, inventory is material to the financial statement, so auditing standard required the auditor to obtain sufficient appropriate evidence regarding the existence and condition of the inventory. To perform the physical inventory counting, the auditor must follow the two steps, which are observing the physical inventory being counted and then performing audit procedure over the company's final inventory to determine whether they accurately reflect to the actual inventory count results. There are three important that auditor must be aware. Firstly, the auditor count is important because the book inventory is adjusted to the physical count. And second, alternate audit procedure must be used if an auditor cannot attain physical count. And the third is auditor should modify the audit opinion if sufficient evidence cannot be obtained. Lastly, auditor can gather the inventory evidence by using the method pricing and compilation of inventory. This method we relate to the balance related audit objective, and we follow the common inventory pricing and compilation procedure. Firstly, inventory item in the inventory listing schedule exists. So for the section for this balance related audit objective is existence. So So the procedure is trace inventory listing in schedule to inventory tag, and the auditor recorded count for existence and description. Second is existing inventory item includes in the inventory listing schedule. The assertion is completeness. So the account for unused tag number shown in the auditor documentation to make sure no tag been added. And then the trace from the inventory tag to the inventory listing schedule, make sure inventory no tag included. And then lastly, the inventory item in the inventory listing schedule are accurate. For the assertion is accuracy. For the procedure, trace inventory listed in the schedule to inventory tag, and auditor should record it count for quantity and description. And then auditor must perform price test of the inventory.
Moving on to the question, this is the question from February 2023. Questions asked about substantive test for inventory evaluation. So following the question, Amira Sundian Berhad, a manufacturer of home electrical appliances and furniture with a large factory and 3 warehouses in Ipoh, in performing audit of Amira Sundian Berhad for the financial year 2021, Sasha, the audit officer of IZAM & Co, came across the following matters. And for inventory evaluation, upon attending the company's year-end inventory count, Sasha and her audit team confirmed that the processes and control in recording the inventory were acceptable. The finished goods as well as the work in progress were material to the financial statements. Sasha and her team managed to confirm the quantity and stage of completion of the work in progress. It was found that the company quality control officer checked the goods before they were being dispatched out. The production manager informed that there was a batch of product line named Pendeka, which was a special order by a customer, did not meet the customer's requirement, thus need to be disposed. After evaluation, it was determined that the total cost of this inventory was amounted to RM 780,000. However, the managers have eventually found another buyer that agreed to pay 710,000 for the inventory. The question asks us to describe 4 substantive procedures that Sasha and her audit team should form to obtain sufficient and appropriate audit evidence in relation to Amira Sundian Berhad's inventory. So the substantive procedures for inventory evaluation is: select a sample of year-end finished goods and compare costs with post-year-end sales invoices to ascertain if net realizable value is above cost or if an adjustment is required. Second one is discuss the basis of WIP evaluation with management and assess its reasonableness. The third one is select a sample of items included in WIP at the year end and ascertain the final unit cost price by verifying costs to be incurred and to completion to relevant supporting documentation compared to the unit sales price included in sales invoices post year end to assess NRV. And the last one is review aged inventory reports and identify any slow moving goods, discuss with management why these items have not been written down or if an allowance is required.
Now we move to question 2, which is from June 2018. The question states that auditor may engage inquired a large number of inventory audit procedure before they are comfortable that the inventory valuation is reasonable. If inventory is considered as material to the financial statement, the auditor shall obtain sufficient appropriate audit evidence including attendance at physical inventory slot taking. The question required identify 2 audit procedure for inventory, and the answer, number 1, observation of physical count. The auditor can physically observe the inventory counting process to ensure accuracy and completeness. Number 2, substantive analytical procedure. Analysis of trends and ratio related to the inventory can provide insight into its reasonableness, helping identify any anomalies. Question number 2. Determine the importance of auditors' attendance during physical inventory slot taking. The answer, number 1, verify existence and completeness. Presence allow auditor to directly confirm the existence of inventory item and ensure that all the items are counted, minimizing the risk of misstatement. Number 2, observe internal controls. Auditor attendance enable the observation of internal controls related to inventory, such as segregations of duty and proper documentation ensuring the reliability of the inventory valuation. That's all from us. Thank you.